Peter, I want to transition on to another point and talk about Japan for a moment, because you sort of believe that their easing efforts are going to fail. But today, Japan's first quarter GDP growth, it actually came in at an annualized rate of 3.5%. So what do you think the chance is that the Japanese can actually create some real growth here?
In the very short term, you get a little bit of a boost, just like you shoot yourself up with heroin, and it feels good initially. But you got to think about the long-term consequences. This is a disaster for Japan. Japan doesn't need more inflation. That's not what's going to help the economy. In fact, stable prices or slightly falling prices, if you're lucky enough to have that, are great for your economy, because as prices come down, consumers can buy more stuff. You create purchasing power when prices go down. Now that prices are rising in Japan, and they are rising for all sorts of things, that's going to make the average Japanese poorer. But the big problem that's going to hit Japan, I think, like a tsunami, is going to be you have all these Japanese citizens that have been sitting on a pile of Japanese government bonds. They need to sell those bonds. They need to get out of Dodge. They need to get rid of their yen and buy something, anything, stocks, gold, foreign stocks, foreign bonds. And when this happens, interest rates are really going to move up in Japan. They're already moving up. Look at those JGBs, but they got a lot higher to go. But
right.
The Bank of Japan cannot afford to service that debt. Maybe if it wants to liquidate its stockpile of treasuries, it would be able to do it for a while. But if it doesn't want to do that because it wants to keep artificially debasing the yen, you've got a real crisis.
So link that back to gold for me.
Excuse me?
Link it back to gold for me.
Well, that's bullish for gold, because the Bank of Japan is going to have to print ever-increasing quantities of yen to try to prop up that bond market, and that is bullish for gold. And, all this cheap money, and you've got other central banks now. Australia just cut rates, despite the fact that the economy doesn't need a rate cut, because they're trying to keep the Australian dollar from rising against the yen. South Korea is doing the same thing. Look at what they're doing in Scandinavia. Everybody is trying to debase their currency in a currency war to compete with Japan, to compete with the United States. All of this is bullish for gold, because it means there's no safety in any currency.